Hello guys, this is Ruta FX. In this video, I'm going to teach you how to use smart money concept in our daily trading. Smart money concept is a method that is being used by institutions and then international banks and also the big boys on the forex market. So it helps to get a high probability trading opportunities. And this method is a method that has helped me to be more profitable and in the forex market. So make sure you watch this video from the beginning to the end, and also make sure you subscribe to my YouTube channel. If you want to join my trading community, send me a WhatsApp message and check on my description and you see my WhatsApp number. Send me a WhatsApp message over there. And also, if you want to trade with my recommended broker, check on my description, click on the link below, and also create an account with my recommended broker. So without wasting much time, we will dive into a smart money concept trading. Okay, so let's start. If you want to be profitable, guys, then you need to make sure that you are going to understand and then start trading like an institution or like a professional trader. So when we say a smart money concept, as I've said earlier on, it's a trading method that is being used by institutions and also international banks and also the big boys on the forex market. They determine the overall direction of the market. And so as a retail trader, we need to adapt the trading style of these big boys on the market so that we will be more profitable. Now, when you open your chart, you need to look out for a break of structure, okay, by demarcating your recent low or the recent demand and then the support area, okay, or your resistance and support area. Then after that, you watch the market, how the market behaves at that area. And also look out for other block. If there is, look out for that and also demarcate that on the chart. And then look out for liquidity hands at the levels you've demarcated, your resistance and then your support level. You have to look out for a liquidity swap, a liquidity sweep or liquidity hunt. So a liquidity hunt is when the market hits the resistance area or the demand area and the market push above it, but at the end of the day, the market is going to be rejected before it starts reversing to the opposite direction on the market. You also will have to look out for a fair value gap and also a change of character on the market. Okay, so the step by step in using the smart money concept is, first of all, when you open your chart, you have to identify the market structure. You must know the type of market you are trading at the time you've opened the chart. So look out for a market structure. So if it's a trending market, which is a bullish market or a bearish market, you can trade with that. And if the market is also ranging market, you can trade with that. But make sure you avoid a choppy market. The next thing you have to do is to identify your resistance and then your support zones, okay? And then you wait patiently for a liquidity sweep at that zones. Then the next thing you also have to look out for is look out for a break of structure or a change of character, okay? And you also have to look out for a fair value gap on the market. Also make sure to set a tight stop loss. So as a scalper, you can use a maximum of 5 pips per trade. You can raise maximum of 5 pips per trade. And also, if you are a sniper trading or a day trader, a maximum of 20 pips is enough. Okay, and then be targeting 1:2 or 1:3 risk to reward ratio. So if you are a scalper and then you are using the smart money concept, you have to confirm your market or analyze your market from the 15 minutes or the 5 minutes, and then you look for your entry from the 1 minute or the 3 minutes. If you are a sniper trader, a sniper, or a day trader, you can check out for your entry, your confirmation from the 4 hour time frame or the 1 hour, and then you look for your entry from the 15 minutes time frame or the 30 minutes time frame. So you can use the trading view to analyze the market, and then you look out for your entries. Make sure you ensure proper risk management. So you risk only let 1% or less per trade, and also avoid trading high impact news. Expe- if you are not experienced trader, you need to avoid trading a high impact news. Also stick to your trading plan and avoid impulse entries as well. Make sure you backtest what I'm going to teach you, so that you it will help you to know when to enter the market and when not to enter the market. And that is going to make you more disciplined, more profitable, and that is going to change your entire trading style. Okay, so from here, I will change to the trading view, and then we'll analyze the market from the trading view. So first of all, as a sniper or as a scalper or whatever trading style you trade with, if you want to use the SMC trading strategy, when you open the chart, you first of all will have to ask yourself, is the market trending or the market is ranging? So if the market is trending, that's fine. If the market is also ranging, that's also fine. You can trade. But if the market is choppy, choppy market is when the market is moving haphazardly. There's no direction of the market. It's just moving up and down, up and down. That one, you will not be able to make a good decision, and so you have to quit the market until the market starts trending or ranging. Then you can make your decision. So when you open the market, for example, this particular Bitcoin market, you have to identify your recent resistance area and then your recent support area. So you have to place your trend line over there, that is your horizontal trend line over there, just to identify or demarcate that zone as your recent resistance area, and also place another horizontal trend line at the support area. So after that, you have to wait patiently until the market hits or reach that zones that you've demarcated. So for example, this market is moving to the downside, and then we are expecting the market, when the market hits this support area, you'll be looking out for a liquidity sweep or a liquidity hunt. If there is a liquidity sweep, what you are going to see is that the market will have to push strongly and push below it, then the market will be rejected at that level, and you will see a reversal, a bullish reversal pattern, and that is where you will be looking out for your entry. When you trade like that, your probability of make getting a good trade is high. So over here, when the market hits this area, the market will either sweep liquidity and then leave a bullish reversal candlesticks, which is going to validate a buying entry. Or you have to look out for a change of character or a break of structure. So for the break of structure, the market must push and close below this horizontal line. That tells us that the market will continue to push to the downside. But if the market is rejected at this area, we will have to also take notice of that. Now, you use your position tool. For example, I want to use my position tool over here just to So for example, over here, after you've identified, after there is a liquidity sweep and then the market is, formed a bullish reversal pattern, then you'll be looking out for your entry. So this is how your market is going to be. So you always trade at a, a, at a key level like that. Okay, so you'll be looking out for your buy entries somewhere here after the market creates a bullish reversal pattern. It can be a bullish engulfing pattern over there. It can also be a bullish harami. It can be a pin bar. It can be a hammer. It can also be a doji candle. Any of them can also be a morning star. So any of them, once it's formed over there at the key level, then you enter for the market. Also, if you'll be looking out for a sell, then you have to wait for the market to push all the way to this resistance area. Once there is a liquidity sweep and the market is rejected, when we see a pin bar or a rejected candlestick form which confirms a bearish move, then we can be looking out for our sell entry. So also, if you look for sell, then it should be this direction. It should be of this direction. So that is how we trade with a smart money concept. So make sure you identify your key levels, wait for the market to reach that key level, look out for um, a reversal, a bullish reversal candlesticks or a bearish reversal candlesticks at that key levels, and then you look for your entry. This makes you enter a high probability market, and the risk to reward ratio is also beautiful and good. So make sure you watch this video fully and understand how the smart money concept works. And you, from today onwards, you are going to be more profitable and your trading style will also change. Make sure you will be disciplined as well. If you don't understand anything, make sure you check on the description, send me a message. You'll see my WhatsApp number over there. Send me a message. If you want to join my trading community as well, send me a message and I'll respond to that. If you want to trade with my recommended broker, check on my description, click on the link, and create an account with my recommended broker. Thank you for joining. Thank you for watching, and then I'll see you next time. Bye bye, guys.